Hey there! Would you like to learn how the brand new higher benefit reverse mortgage actually works? I thought so. So what I'm going to do is I'm going to explain number one, what the higher benefits are with reverse mortgages. Number two, how reverse mortgages work from kind of a 10,000 foot view. We'll also talk about some of the myths and misconceptions that are kind of commonly held about reverse mortgages. Then, if we have time, maybe we'll go into a couple scenarios. We'll take a look at how other folks have taken reverse mortgages and really improved their financial situation. But first of all, my name is Jason Eichmiller, and over the past 12 years, I've helped over 400 seniors learn about and get reverse mortgages. So, let's jump right in here. First of all, let's go over what a reverse mortgage is and what a reverse mortgage isn't, because from talking to so many people, and this isn't just seniors, I talk to financial advisors and attorneys and CPAs who don't understand how reverse mortgages work. So I spend a good amount of my time advising them and teaching them on how they work and how they don't work, and I'm going to give you the exact same information right now. So what a reverse mortgage is it's a FHA program that's only available for folks who are 62 and older, who own their home and live there. There are folks who can use reverse mortgage to purchase their home as well. But right now, we're going to talk about if you live in your home and you want to continue to live there, that's the type of reverse mortgage that we're really going to go over. So what a reverse does is it's going to give you part of your home's value, not the whole thing, but part of your home's value based on your age. Now, why do we only give you part of your home's value? Why don't we just say, here's the whole value of your house, go ahead and take it? Well, the main reason is, and this is one of the misconceptions that people have too, the main reason why we give you part of your home's value is because you still own your home. We're not buying the house from you. You're not selling it to us. What we're doing is we're just giving you a bit of it, and the money that we give you is going to be a lien, which means just a regular old mortgage. The only real difference, see, people try to complicate reverse mortgages all the time. They keep looking for what's behind door number two. But the real difference between a regular mortgage and a reverse mortgage is that with a regular mortgage, every single month you got to make your payments. With a reverse mortgage, you can either make payments if you want, believe it or not, some people do make payments, or you can choose not to make mortgage payments. That is the big difference. Both of them, it's just money that we give you at a kind of a high simplified level. It's money that we give you that's leaned up against your house. It's a loan on your house. That's all it is. So anyway, getting back, sorry, I had to bust into that because a lot of folks have questions about it. A lot of folks think that that we're somehow giving you some money and then getting the house, and so that's just not true. So what we do is we give you part of your home's value in tax-free cash without requiring you to make a monthly mortgage payment, okay? The amount of money that you get is based on your age and the value of your house. So if you're 62, you'll get a certain percentage, kind of a lower percentage, and as you get older, you're going to get more. So maybe that's the first thing that we'll do here. We're talking about the higher benefit reverse mortgage. So let's take a look at somebody who's 62 at the very beginning, and let's take a look at somebody who's in their 80s, okay? So 62, and let's say 87. Now, let's say they have we'll just do percentages here. So it used to be that if you're 62, you could get about 37% of your home's value. I'll put a frowny face. That's how it used to be. That was the low benefit reverse mortgage. Didn't really give out a lot of money. Now, smiley face, at 62, you're able to get somewhere in the mid 40% range. So let's say 45 to 50% of your home's value. That's a pretty big jump in money that you can put in your pocket. It's pretty nice. I like the higher benefit reverse mortgages, so will you? Next, if you're 87, folks in their high 80s, they used to be able to get about 65% of their home's value, which is better, but it's not exactly great. Now, they're able to get about 74 to 77% of their home's value. Look at that difference. That difference right here is more cash that you're able to take. I hope that makes sense. Now, a couple things that you need to know about reverses. We went over approximately how you can get them. I want you to know your responsibilities and your rights, okay? When you have a reverse mortgage, you stay on the deed. This is your house. You're not selling us the house. We're not taking it from you. In fact, when you pass away, first of all, if you have husband and wife, no matter what age your spouse is, as long as you're 62, you can get a reverse mortgage and you can protect your spouse, okay? So even if you had a 75-year-old man and his 50-year-old wife, the 50-year-old wife is okay. In fact, when the 75-year-old passes, she'll be able to stay in her home for the rest of her life and the reverse mortgage won't become due. So it's perfect for that kind of age difference in spouses. Now, once both of you pass away, then the house is going to go to your kids. Excuse me. So, and I don't just mean it can only go to your kids. What I mean by that is the house will go to whoever you want it to go to. Most of the time it's the kids, but it can be the church, it can be a charity, it can be a friend, a neighbor, whoever you want it to go to. They're going to get it. Now, and that's another misconception. People think like, oh yeah, when I die, the bank gets my house. It's not true. So when you die, house goes to your kids. They're going to have a couple choices. They basically get to decide whether they want to keep the house or whether they want to sell the house and make some money. If they want to keep it, say they want to live there or they want to rent it out, then they can just refinance whatever's owed. So whatever's owed is going to be the amount of money that we give you plus the interest rate. And the interest rate's somewhere in the low 3% range right now. Where's it going to be in today's September 1st, 2020, by the way? Where's it going to be in 3 months, 6 months, 9 months? Who knows? Could be lower, could be higher. But right now it's in the low 3s, okay? So what they'll do is they'll just pay back, they'll just refinance whatever's owed. Excuse me again. When that is however much money you took plus the 3-ish% interest rate, okay? If they don't want to keep the house, if they want it to go, if they say, hey, we're not living there, we don't need this thing, but we'd sure like some money, then what they'll pay back at that point in time is they'll sell the home, whatever is owed on the house will get paid back, and they'll get the rest. So again, they'll sell the house, whatever's owed gets paid back, and your kids, your loved ones, whoever gets your house, gets the rest of the money. Okay? I hope this makes sense. I know I'm going kind of fast here, but I want to give you as much information as I can about how this works. So let's talk about a couple things. We'll talk about a couple examples on how people use reverse mortgages, and we'll talk about how you can take money with a reverse mortgage. So when you get a reverse mortgage, the first thing that we do is we pay off whatever is owed on the home. That means if there's a mortgage, that means if there's liens, that means if there's judgments, anything that's secured on the home or owed on it, we pay it off, right? Most of the time, 100% of the time if it's a mortgage, that means that you go from paying that principal and interest to not having to pay the principal and interest, okay? So let's use an example. Let's say that you have a $500,000 house. And let's say that you owe $200,000 home. And let's say your loan size, you can get 60% of your home, which is $300,000. Okay? So, and let's say the payment on this $200,000 loan is $1,500. The first thing that we do with a reverse mortgage, every single time, is we're going to pay off this $200,000. That means this $1,500 that you're paying to the mortgage man, no more. You're keeping that in your pocket. But then you can also see through math, because the loan size is $300,000, and we only spent $200,000 to pay down the loan, you have $100,000 left to take. So how do you take that $100,000? Give you a couple of options here. Let's see here, income, and LOC, which means line of credit. So the first option that you can take is you can take what's called a lump sum. So this $100,000, take it tax-free. Most of the time, you get the majority of it up front. So it's about 60% up front. So 60% now and 40% after 1 year. So that's how the lump sum works. If you want to do monthly income, it's very similar to an annuity. You can decide to break that $100,000 up and get it for your lifespan, or you can say, hey, I only want it for 10 years or 15 years or 20 years, something like that. It's pretty easy to understand that. The last thing that we have is a line of credit, and the line of credit is special. The line of credit is, when you understand it, I spend a lot of time teaching financial advisors and CPAs about this, and once they understand how it works, they almost always recommend the line of credit. Here's why. The money that you get, this $100,000, it actually grows every single year. And the growth rate, right now, it's about 4%. So, in essence, we're starting at $100,000, and this is if you don't take any money out of it. Into the first year, 104. Second year, 108. Third year, 113. So let's say that you waited 3 years to take it. Suddenly, instead of having $100,000 to take, you have $113,000 to take. And of course, when the money's sitting there, you don't pay any interest on it. And when you take the money, you don't have to make any payments on it. So a lot of folks use this to, especially if they don't have long-term care insurance, they use this to kind of create an additional savings account or a bucket that they can take from when they really need it. So that's the line of credit. Again, it's a very, very intelligent way to take a reverse mortgage. Let's do one example real quick. So we can use this same example: $500,000 home, $300,000 loan size, $200,000 owed. So there's $100,000 left over. So let's say that there is. All right. Let's say that there's $30,000 owed in credit cards, CCs, and let's say that the rest of the money you want to save because your spouse isn't doing great and you might need to either modify the home or you might need home health care, okay? By the way, we do reverse mortgages quite a bit for home health care. So what we'll do is we would do a lump sum of $30,000, and then we would do $70,000 in the line of credit. Why is that smart? We're taking the 30 to pay off the credit cards, which obviously you'll have lesser monthly payments, and it'll be easier for you to survive on your fixed income. Okay, so that's one thing. Credit cards, boom. Then let's say the payment was $30,000 of cards is a lot. So let's say the payment was $1,000. Now you don't have your $1,000 credit card payment anymore. Your line of credit of 70, you're gonna keep that money in the line of credit. Again, no interest is gonna be charged on it. Okay? And of course you can take the money when you need it, it's your money, but at the same time, you're gonna let that grow. So 70K turns into, end of the first year, what's that? 4% of 70 is 28. So 72,800. That's supposed to be a 7 right there. In the second year, whatever it is, in the third year, so say that's 75,800, and it compounds. The growth is compounding. So you can see how a little bit of money years later turns into a lot of money. Anyway, what I'm going to do is end here. Gave you a lot of information over this past 15 minutes. So here's what I want. If you'd like to learn how a reverse mortgage can work specifically for you and your situation, and of course, if you're interested in it for a family member or you'd like information for a client, I'm glad to help as well. So you can do one of two things. Number one, right up above here, you can see my toll-free phone number, so you can always give me a ring. My name is Jason Eichmeller. My toll-free number is 888, so it's 888-309-9705. I'll give you that again if you're writing it down. 888-309-9705. So you can always call me. Or if you want to schedule an appointment to talk, just click the button right below. It's right below here. And that button will take you to a information form where I'll gather some information from you just so I know what your scenario is when we are chatting. So then we'll pick a time and a day to hook up and have a conversation. So again, if you're interested in learning more about how a reverse mortgage can specifically work for you, or if you have any other questions, I'm always glad to help. Just go ahead and call me at the toll-free number above, or you can schedule an appointment right below. All right, thank you so much for your time. I had fun doing this. I hope you learned something. And if you'd like help, I would be more than happy to help you. Thanks so much, and take care of yourself.